Thank you, and good afternoon, everyone. Our session topic is managing not-for-profit sales taxes in Intacct. My name is Pearman, as Amanda introduced, and I've been a consultant for close to 25 years. And I've come across several not-for-profit agencies, and I've implemented Sage software to name a few. Let's go into, look at the next slide. We have Boys and Girls Clubs, Ontario Trillium Foundations, several other United Ways, ALS Canada, and United Way, by the way, I have worked with United Way Calgary and United Way Greater Toronto Area, and several YMCAs, including the YMCA Hamilton and Canadian Liver and Kidney Foundations. In addition to that, we have worked with several community livings, community organizations, membership organizations, agencies such as Responsible Gambling Council, and membership associations. And then also we have several First Nations, Regional Medical Associates, Public Health Ontario is a client of ours, New Brunswick Medical Society, and several municipal and provincial organizations. So you may ask, these are all great logos. What do they all have in common? What they have in common is not-for-profit tax management, or some special tax management is required here. So we'll keep going here. So how do we manage the not-for-profit taxes in Intacct? Number one, we want the tax calculation automated. Secondly, the tax effects need transacted appropriately, whether they are input tax credits, which you claim back, or non-collectible that are expense or allocated taxes allocated to your expense accounts. Finally, we should have proper reporting for tax compliance and audit. So a little bit of history here. If you are already an Intacct customer, on the sales tax compatibility of Intacct, if you become an Intacct client before 2021, that's when they released the multi-tax module for Canadian sales taxes. So before that, we had a few limitations. We configured the taxes in each module, such as order entry and purchasing, and we were able to auto-calculate taxes in accounts payable. So we are always used to purchase module for payable invoices. Another limitation was the tax reporting was limited to printing the GL account transaction detail. Now we have the ability to manage Canadian taxes for profit and configure rate for the not-for-profit taxes utilizing the tax module. So let's look at it. And today's session, we are going to look at the not-for-profit side, and we are going to look at how to manage the sales taxes as an example for a Canadian not-for-profit organization for this demonstration today. So in this example, we have the Ontario sales tax, which is HST, which is at 13%, as you all know. But when it comes to for not-for-profit organization, the 13% is split into, as you see, into GST and PST, and there are certain percentages that need to be going into the ITC, which is claimable portion, and the rest need to be expensed. So we're going to look at how we are able to do this within Intacct. So let me start up the demo. So I have here a sample company. So let's first look at the tax module. So here's the tax module. So once again, if you became a customer of Intacct before 2021, chances are you don't have this available. And we will address it if you require this or if you're interested in this. You could talk to us and we could see how we could get that implemented. And I also talk about the process for it. So the tax solution, of course, we'll take a look at it here, is the Canadian sales taxes. And then we have the ability to go and activate the right entities that will affect the tax. And then out of the box, there's the provincial and territorial based taxes automatically populate. But for the not-for-profit, what we do, we create specific tax details because we do need to look at them. For example, the GST is split 50-50, so the 5% becomes 2.5%, and 2.5%, one of the 2.5% gets expensed, the other 2.5% hits the ITC, which is claimable. So that kind of configuration, we do it for GST and of course the PST side as well. Okay, so let's look at the PST part. Okay, so the PST is also, as you could see, 8% is split 82% and 18%. So that's the breakup of the 8% into 6.56 and 1.44 mathematically. And then that's how we're going to see how we are going to allocate that. So now let me just go in and take a look at the vendor that we have this tax allocated to. So let me bring up BAS as our sample vendor. And then if you look at BAS, in the vendor setup, what we've done, we've attached this particular tax scenario here. So we said, okay, this vendor is in Ontario, okay, Ontario vendor, and then the default tax schedule is also Ontario. So if you look at the tax schedule, you will see the 4 different items. Although Ontario HST is one tax, 13%, we have to break it up this way to manage it for the not-for-profit. Okay, so the ITC and the expense, and then again the PST portion is also broken up into ITC and the expense. Okay, so that's the tax default, and that's how we attach that to the vendor. And then now if you go and look at a bill, so let me just go in and look at a bill. So I have created a bill here. Okay, so BAS is the vendor, as you could see. And then I have put 2 lines on the bill just to make the calculations and the information easier to understand. I have put in one detail line of $100 and another detail line of $10. And as you could see, it has gone in and calculated the 13% and updated the amount transaction total for that line as 113, and again $11.30 for the second line. And then in the total here, as you could see, the percentage breakdown and the amount breakdown. Okay, so the total value of the tax here on this bill is $14.30, broken up into these details. So if you want to even look at the details on the individual line, we are able to do that here as well. Okay, so individual lines, and we are able to do that. And optionally, we have the ability to overwrite these values as well. Okay, so if you have to round up or round down on the taxes, sometimes that's what happens on the invoices. We are able to do that as well. Okay, so let's look at how this will affect when I post this line, how this affects the posting details. Now here is the GL that's created, and I'm able to drill into it from the source document. So if you look at it, there is the $100 plus $3.94 that's expensed, and of course the total accounts payable value is $124.30. That's the total value of that bill. But at the same time, we have the GST receivable separated, and then the PST receivable. These are the ITC parts separated. And then again, there is another expense of $10.39. So this is what we are able to do within the system. And so let me now go in and look at how we can also capture it on a report. So before, like I said, if you don't have the tax module, you are transacting and tracking your reporting on the GL level. So now let me go in and see where we can see the tax tracking report. So I have this custom report that's created called tax tracking. And then my transaction was November, so I'll just do it for November 2023. Okay, so that was the bill. As you can see, $110 was the base amount, and here are the different taxes, and that adds up to the total. Of course, if there are multiple invoices, they will show up. And if I go customize again, and if I could show this in much more detail as well, so that gives you a lot more detail, breaking it up, the two lines in group of this particular taxes, the expense side versus the ITC side. Also, what I'm able to do is in my custom report, I can select the GST expense component. So you may wonder, we are expensing it, it's already allocated to the accounts. Can we just see how much taxes are allocated? The answer is yes, we can. So here's the subtotal or the detail line level, and then in the 2.5 got $2.50 got allocated to the expense. So on the GL level, it'll be $102.50. And similarly, for the same line, you will see the allocated expense. We can also go back and say, okay, that is my expense. How about my ITC? Yes, we could view that as well. And that shows you pretty much the same amount, but under the NFP ITC records. Okay. Similarly, we can look at it for the provincial side, Ontario PST. Here's the expense side. Now the provincial side, of course, it's not a 50-50 split. It's going to be, expense side is going to be the 18%. And then the ITC or claimable side is 82%. So it's 1.44 is added. And the other side will be 6.56. So let's look at that ITC side. And there's a 6.56%, and the amounts are added up and gives you the total. So that makes your tax filing a lot easier, your audit trails a lot easier. Also, it keeps your GST separate from your PST. If you ever have to report, and I know if you're a not-for-profit association or an organization, you will have to submit this file when you do your tax filings in a separate area of your HST filing. Okay, so that's basically what we are able to do within Intacct. So let me switch back to the PowerPoint. And then we'll recap, and then we will do, we'll take some questions. Okay, let's see, change this. Okay, so let's see if, let's do a recap. So to summarize, we've reviewed how Intacct can automate tax calculation and allocation to expense and receivable, which is ITC accounts. Capture the tax effect in transactions. We have reviewed a sample AP bill transactions from an Ontario vendor for a Canadian not-for-profit organization. View the details on screen and on reports. That's what we were able to see. So now let's see if we could, if you have any questions that we could answer for you.
All right. So we do have some questions here. The first question is, can an employee user approve transactions?
Yeah, so in Intacct, the users are licensed differently. If you're an Intacct customer, you already know an employee user pack that consists of 10 employee users cost a lot less than even one business user. But it's limited in functionality. It's mainly view only. But an employee user, to answer the question, an employee user can approve all transactions in accounts payable and in purchasing module. Okay. Did I get that question right, or am I giving? I have a feeling I may not have gotten the question right.
That was good.
Okay.
We are going to move on to the next question.
Okay.
Next question here is, do each users have control over the email reminders?
Okay. Yes, they do. Each user under their user preference can manage email reminders. Some of these email reminders are built in within Intacct, and then users have the ability to control these. Okay. Any other questions you may have?
Perfect. That is the end of our question period.
Okay. Well, thank you. Thanks all for participating, and enjoy Bass Connect. And if there is any other information you need, please contact us. You can reach out to our help desk or your account manager related to the tax or any other questions related to Intacct. One of the questions I know you may have when you view this recording, or when you are, if you're in this session, is that you don't have that tax module, what you go about doing it. So to answer that, the tax module is actually included. One of the tax module is included. So if you're in Canada, it's already included. So subscription is included. However, there will be some services related to implementing it and setting it up for you, and then providing some kind of training. But it is a much more powerful tax module than tracking on individually on the module level, in the purchasing module or order entry module. So if you're interested, let us know. Please contact us, and we are happy to have that discussion with you.